This merger is one of the most synergistic imaginable in the lithium business. Piedmont and Sayona have been partners in Quebec for 4 years. While operations have progressed very well in Quebec, a fantastic job by the whole team at NAL, the complexities involved in the joint venture and our offtake agreement have been counterproductive and, frankly, a negative for both of our stocks. For both Lucas and me, the most common question asked by investors has become, when are you going to put these two companies together to create a bigger, stronger, simpler entity? So here we are today, mission accomplished. Let me summarize some of the highlights of the merged entity. Lucas will go into more details on the key points. By combining our companies and respective resources, the merged entity becomes a leading lithium business with one of the world's largest spodumene resource bases. MergeCo will be the largest current lithium producer in North America, and the merger creates the opportunity for a significant brownfield expansion at our core producing asset, North American Lithium. We also have 3 exciting DFS stage development projects: Ewoyaa in Ghana, which we consider the best located lithium asset in all of Africa; Carolina Lithium in North Carolina, one of only 2 significant spodumene projects in the United States; and Moblan in Quebec, which is a true Tier 1 asset and the best located in the James Bay region of Quebec. We believe this global portfolio of producing and development projects is unrivaled outside the few majors in the lithium business. Lucas will be the CEO going forward and will bring together the best of our respective teams. Our board has been evaluating succession planning for me after almost 8 years in the Piedmont CEO post, and Lucas comes out of central casting with a very strong pedigree of planning, building, and operating very significant mining projects and businesses. The board of the combined company will be 50-50 with 4 representatives from each. The chair will come from Piedmont, and the board will have an intense focus on strong corporate governance. Lucas will speak to the significant merger synergies we expect. I would just note that these synergies are on top of the considerable cost savings initiatives each company has implemented over the past 12 months. The merged company will have a strong balance sheet in place. We put together a very strong funding package to allow the company to advance its development projects in an intelligent way through the current challenging lithium environment. Cornerstone by Resource Capital Funds, one of the world's largest and most successful mining private equity firms. We're very proud of their endorsement after a period of considerable due diligence. The merger has been unanimously approved by both boards and will be structured as an all-stock merger between Piedmont Lithium and Sayona Mining. Sayona will be the surviving entity, and Piedmont and Sayona shareholders will each own approximately 50% of the merged entity prior to consideration of the RCF investment. We will have a primary listing on the ASX and a secondary listing on NASDAQ. Australia is the world's leading lithium-producing nation, and the ASX is the natural home for a mid-cap spodumene producer. The U.S. listing will build on Piedmont's successful NASDAQ listing and offer investors worldwide the opportunity to invest in the merged entity. The exchange ratio will be 527 Sayona shares per Piedmont ordinary share, resulting in pro forma ownership of approximately 50-50. As you might imagine, a lot of analysis and negotiation went into the determination of the exchange ratio. Lithium stocks, and ours in particular, have been volatile over the past year, but the relative market caps of Piedmont and Sayona have regularly reverted to 50-50. In fact, at the close on NASDAQ on Friday, the shares were right at 50.0, 50.0. I would add that a share consolidation of Sayona is being evaluated as part of the merger transaction. More news to come on that front in due course. The company will be headquartered in Brisbane, Australia, and will maintain its U.S. headquarters in Belmont, North Carolina, and obviously a strong presence in Montreal and the province of Quebec. The transaction is expected to close in the first half of calendar 2025. Completion is subject to shareholder approval of each company, regulatory approvals, and other customary conditions.
I'll just spend a couple of moments taking you through the respective assets. So from the Sayona side, we've got NAL, which is the largest producing spodumene, hard rock spodumene producer in North America. We're located in Quebec, and I'll talk to how we're performing operationally. We've got Ewoyaa as well, which is more of a satellite deposit, and then Moblan, which is a greenfield project at the southern end of the James Bay region. As Keith touched on, we think this project's uniquely located and it's got some strategic advantages as compared to others that are trying to develop projects in that region. Then stepping across to the Piedmont side of the portfolio, Carolina Lithium, located in Carolina, contemplates an integrated project, so that would be not only a hard rock spodumene mine, but also conversion into lithium chemicals, which gives us nice diversity in the portfolio, and again, strategically located in North America from a geopolitical perspective. And then, as Keith described, Ewoyaa, we've had our folks actually go down and visit Ewoyaa, and Sylvain Collard, who's our President and COO in Canada, has actually spent 8 years operating in West Africa. So we've got a team that actually knows that area well, so we think that's going to be certainly complementary and we look forward to being able to work with Atlantic in bringing Ewoyaa and developing Ewoyaa and bringing it to market. Think about NAL's ultimate production capacity. So our market guidance is in the order of 190,000 to 210,000 tonnes for FY25. There's clearly a real opportunity for us to think about that expanded resource base and how that would play out in terms of expanded volume. So whether that's another 100,000 tonne, another 200,000 tonne, that's one of the key activities and one of the key milestones, and one of the reasons that we want to ensure that MergeCo is adequately capitalised, that we could drive projects forward. A couple of other key things to note at NAL. We'll be progressing. At present, we're mining through remnant underground stopes. We'll continue to mine through those, but we'll be through those in a couple of years. So there'll be a reduction in cost because effectively those additional safety precautions will fall away. In addition to that, the strip ratio from the preliminary work that we've done will drop significantly because we're developing along strike rather than having to go deeper. Clearly, simplification of the ownership structure, it's going to remove contractual complexities. And ultimately, we think that if we look across development in the Quebec region, we'd like to think this presents an opportunity to be one of the lowest capital intensity projects to be able to bring spodumene concentrate to market. Because in reality, the mine's readily expandable, and what we're talking about is, at this stage, just being able to increase processing capacity. So we think this is an excellent opportunity, and given that it's a brownfield site, things like mineralogy, how it's going to perform from a metallurgical perspective, and also the permitting aspect is significantly de-risked as compared to, say, a greenfield project.
Some detailed information on the US $100 million or Australian $150 million funding process, the use of proceeds, and the merger timeline. So the merger is expected to close in the first half of calendar 2025 after shareholder approval is secured by each company at meetings currently targeted for March of 2025. The RCF subscription of approximately $45 million US or 69 million Australian is conditional upon closing of the merger and would close immediately after the merger closes. The Piedmont placement and the Sayona unconditional placements are expected to aggregate approximately US $54 million or Australian $80 million and are expected to close later this month and are independent of the closing of the merger.